Welcome, everyone, to the Cryptographic Asset show. We are honored to be sitting down with Jordan Finneseth, markets writer at Cointelegraph. Thank you so much for joining us today, Jordan.
Thanks for having me. I'm glad to be here.
Last time we spoke about Bitcoin and cultural issues on the Gold, Silver, Bitcoin show. And on this show, I wanted to dive into some of the more hardcore crypto stuff that's going on. NFTs come to mind, as well as DeFi, decentralized finance. I suppose you could argue that NFTs are a byproduct of DeFi, but I'm curious, what's exciting you most in the crypto space today?
Well, a lot of it's actually what's going on with Bitcoin and how they're actually integrating it with the larger society, because this is really going to introduce people to what you're talking about, NFTs and decentralized finance. More importantly, that's actually, I want more people to see what's possible with DeFi than with NFTs, but NFTs are kind of bringing in the crowd. Like we like our memes, we like popular culture and stuff like that. So the current NFT ecosystem kind of speaks to people in that realm. But decentralized finance is really where it's at for to help people kind of become more financially independent and free. I was even reading an article that was saying the average DeFi yield offered for just stable coins is 105 times that what you get in your bank saving account. And yeah, so it's just, there's so many more opportunities, and I think it's the future for people and just finance in general. So it's an exciting time, and I'm really excited to see how DeFi unfolds over the next 5 years or so.
I think some of the concerns with people right now is that while there might be API, APY, et cetera, from DeFi apps, some people still think there is an exorbitant amount of risk to be taken in order to get those returns. They don't know enough about the project, about the founders, whether it's going to be a rug pull, et cetera. Mm-hmm. But the hope, and I guess the ambition, is that it becomes more secure, correct?
Yeah, that's the hope long term. And yeah, a lot of this is, at the beginning, is putting trust in this new system. And there are a lot of scams and stuff and rug pulls that happen in crypto, but there's a lot of legit projects out there. And that's really the important part of doing good research and finding the good projects that exist out there, because there's really good projects built and created by really intelligent people that have the best of intentions to try and improve things for people. And you can find those if you just kind of dig in deeper. But when people start getting into the crowd where they're looking for big gains, that's when you start pushing out into the riskier parts of it. But that's natural. Even Bitcoin, when it first came out, was a risky asset, but it was selling for 2 cents, and now it's over $60,000. So risk comes reward, kind of a thing. But yeah, over time, hopefully risk will decrease as there's other safeguards put in place. You got good audits of smart contracts and stuff like that. It's just going to take time to build out that ecosystem. And there's kind of things that are being put in between, the old world and the new world. You got block fee. They have a credit card, but you're also some of their stuff is actually insured. I might not be correct on that, but I think some of it, I know there's products out there where you can actually have it similar to FDIC insurance for a certain amount of coins, but you have these more centralized entities that even can list on the stock exchange that are getting involved and offering people, block fee offers somewhere between 8 and 10% on stablecoin deposits, which is significantly higher than you can get in your bank account. So there's things like that. They're less risky, but overall, there's always going to be risk when you're going into new financial areas. But over time, it's going to become less risky and more stable, in my opinion.
Other than, I guess, block fee or block fi?
Yeah.
Are there any other projects that you're keeping an eye on?
Are you talking about more centralized or decentralized projects?
Well, either or, I guess, because there is this issue with decentralized finance and how decentralized is so much of it. Of course, now these technologies, though, including Bitcoin, are usually released as centralized technologies, and they have a centralized to a decentralized flight path. And this is what Jeff Garzik talks about. I've heard him most recently speak of it in context to Metronome, which is a cryptocurrency project under the block umbrella. And he talks about how even Bitcoin was centralized because it was only Satoshi Nakamoto theoretically at first, but then it was only Satoshi Nakamoto and Hal Finney, and then on and on. So it takes time for these projects to become decentralized. So I suppose either or.
Yeah, and with Bitcoin, it's got the advantage of, we don't know who Satoshi Nakamoto is. And that's probably why that person, that group of people, whatever it was, chose that route because they're no longer kind of the influence in that game. Whereas Vitalik Buterin's kind of the face of Ethereum, Charles Hoskins is the face of Cardano, to a lesser degree. Charlie Lee's the face of Litecoin, and people got a whole lot, like him and his choices in the last bull run affected people's opinion of Litecoin. So that's like the good and the bad of
Meaning when
having
he
a
sold.
creator. Yeah. So like, it's not really, it doesn't seem like anything necessarily starts decentralized. It's not possible. One person or a group of people come up with an idea, then they can over time progress towards more decentralization. The wider the ecosystem expands and the community enlarges, you can offset or distribute the governing of that ecosystem to the people. And that takes time. And like we've seen that with Bitcoin, even the mining, how the world of Bitcoin mining responded to China's crackdown on it. And they've recovered. I don't know if it's back up to where it was. I don't think the hash rate's back up quite yet, but it's recovered nicely since China just cut off all things. And now even China's coming back out and saying, they're asking the citizens, like, was that a smart move? I personally think it actually had more to do with their power issues during this winter. Like, they're having blackouts anyways. Like, they can't be having people doing mining when there's rolling blackouts in the country. So maybe they had some foresight on that. But yeah, we're all in, the whole world in my mind is kind of moving towards more decentralization. Our governments are people are starting to question the government. We're starting to, like, the rise of cryptocurrencies. Even the internet has distributed things from centralized news to people getting information on YouTube from lots of different sources. So yeah, this is this process over time of decentralization, and it's up to the people to demand it. A lot of times people want one person in charge and to be told what to do, and then there's a group of people that want to all kind of collectively work together and stuff. So it's just kind of what people want and where they can guide people, really.
I wonder, I mean, China is such a black box in some ways. I wonder if we don't even really know in the West what's going on there, on the cryptocurrency front. Have there been sweeps? Have there been arrests? Have there been persecutions of people who are partaking in the cryptocurrency industry? Miners come to mind as one potential target group. I wonder how much information we're actually getting out of China and how much of it is, if it's reliable or not.
Yeah, like I think about this not even just in terms of China, but all the information. Think about you, me, we sit in our room looking at this screen and information is fed to us. How much of any of that do we actually know is really going on there? Like when my own spiritual journey a long time ago, it really kicked off for me. And I still to this day, I'm like, I don't believe anything. Part of it's not believing anything because a lot of it's being told to me from secondhand sources or something that if I don't experience it firsthand and see what actually happened, I'm not necessarily going to believe it 100% because I can't say because I wasn't there. So what's actually going on in China? I don't know. We get to see some videos. We see them like steamrolling a big field of ant miners, or some people getting cracked down. And even if you just think from like behaviorism and how they've cracked down on people for everything over the years, at least from the view that we get here in Western society from Tiananmen Square on. Even them just saying we're going to crack down on this, a lot of the citizens would follow through on that because they're like they'll be serious about it if we push them. So, but that's also obviously just an opinion and an observation from outside standpoint too. So yeah, that is the tricky point on all of this. How much do we actually know what's going on there versus what it's actually like to be on the ground?
Do you think that a distributed internet or a blockchain-based internet could help us achieve information harmony, whatever that looks like?
Yeah, what does that mean? Because that's like information harmony between the world powers of the US and China. We're never gonna have information. I don't know if we'll have information harmony there. So is it more like a level playing field potentially for us as individual humans, maybe? Yeah.
So I think that's where the heart of the question is, I think, is that what you expressed was that we're all sitting in our rooms and we're getting sort of, we are getting isolated, I think, into like information ghettos, essentially.
Mhm.
So I think the most broad-based example of this is like right and left, right? The right hates the left and the left hates the right, and they all follow their own influencers, and they all get kind of they all end up in their own information ghettos.
Yeah, and
So go ahead.
it's designed to like pigeonhole us. You can find anything you want, even if it's wrong. You can search it, and somebody out there is talking about it. Like, man, look, they prove it. It's a trap. Like this is like, it's like a Pandora's box. Oh my God. It's like a Pandora's box. Yeah.
And so we are shown caricatures of each other, and we judge these caricatures vociferously, so the caricatures are like Republicans are white supremacists, or Democrats are communists, for instance. So now you said design, it's really these multi-trillion funded corporations in the social media realm, the big tech companies who design these algorithms, which essentially ghettoize us.
Yeah. And it's I like the opposing force is this decentralized thing that's moving up. There's developers that are brilliant that are developing DeFi protocols to kind of make it so that these centralized entities don't have as much control. It's really like like how do we get at people's attention? Like the big news media has already done it. It's how do we get the people to start looking outside? And I think that they're kind of doing that on their own. Like people, we eventually, like it sinks into us, it hits us like we're being conned or like we're being played. And some people are really starting to get that. And over time, all we can really hope is that more people get it. And it's just, it seems like there's always only a certain percentage of people that are actually more awake than the wider population. And that's just the way this place kind of operates. I don't know. That's an acceptance point that I've come to. And yeah, the best thing I found, and this goes back to even like how I was able to be a therapist in the past. You can't sit in a room with somebody telling you the worst things and even having the little ticks on your face that show you don't like what they're saying. So I had to cultivate this place of non-judgment. That's why. So it's either like people need to realize if we're pigeonholed and we're sitting in our rooms listening to this information, we need to not judge the things that we're hearing as if that's good or bad. This is the truth, because it's always somewhere in between. But that's a personal work kind of a thing. But I'll bring it right back around to to DeFi and the internet. I think so. There's this vast digital space where all this information that where our conversation is transacting through, and the whole metaverse thing and NFTs, it's kind of trying to start introducing a physical representation, even physical digital representation, for us to actually see what's being created in the realm of like the dimension of the internet that we all spend so much time focusing our energy into. So you're going to get NFTs that can represent pictures, art in real life, NFTs that represent your house, deed to your car, deed to your house, property, about anything can be digital. All the future stocks will eventually be turned into NFTs that you can then deposit into your wallet. So this gets rid of like the DTCC and all this stuff, because you don't need people when each person can have a digital wallet and hold all the stocks and everything. They're just NFT tokens. So it opens up a realm of possibility of even more just self-responsibility, but there's always going to be a certain percentage of people that don't want that responsibility. So they'll have custodians or bigger entities that will do that for them.
Patrick Byrne talks about how he became interested in Bitcoin and then blockchain technology and began researching it in certain pillars with certain pillars of society in mind, whether that be voting or otherwise, and how he could apply blockchain to these important facets of society so as to decentralize them. And I suppose that is the goal and was the goal all along of the cryptocurrency industry, the blockchain industry, not to be mistaken with the corporate America version of the blockchain industry, which is really more the distributed ledger industry. And that is the goal of blockchain, the blockchain industry, the cryptocurrency industry, was to essentially build out an entire parallel civilization in some way. We've got like 3 parallel civilizations going on right now, which is maybe we talked about this last time, which is apparently these UFOs that are being spotted, right? Whatever those are, that's a civilization numero uno. And then there's the Western civilization, the one we're taught about in school, which is ongoing. We're post-industrial now,
Mhm.
moving into a technological era, a technotronic era. And then there's this third civilization, which is the decentralized civilization that's being built out by the cyberpunks.
Yeah, I look at it like, yeah, the UFO thing, and that's a whole separate story. And I'm like, yeah, I'll get into like, yeah. But for me, it's even like there's UFOs and we also have technology that we're not told about. So it could be us, but there's both. And I'm like, yeah, I can go way off into woo woo if we want on that. But I think it's really a really interesting point in time, like us individuals, because what you're describing is true. There was a system that was built and it was being governed, and then the internet came and messed that system up. It's like, oh crap, these are not compatible. Paper don't work with the internet. Gold don't work on the internet. This old system didn't work, but we've moved into like 7, 8 billion people. The internet's out there. We're trying to evolve humanity, maybe go to different planets and stuff like that. So was Satoshi Nakamoto a person? Was it the government? They're like, man, we got to start a new system. So they started this new system, but it's evolved to the point where they're building bridges to make it so that the old system can cross over into the new system. There's so many file cabinets full of information out there that nobody can access because it's in a file cabinet and there's 1 or 2 people that work there that have to go and sift through all this stuff. Whereas if it was in a digital form online that may be secured, which is what blockchain adds this layer of security that doesn't make it so I can just copy and send any file to anybody. It makes it so there's only one copy that's a non-fungible token, one of its kind, the only one. There can't be any other versions of it. So you can have any file put on the blockchain, and it's you have to do it kind of right when the information is being created. We can't go put through and even putting all people's medical information into a digital form all the way back from when you were born would take one person a long time just to input all your information. So we're building the system to where all the new people, new information is getting input right away. I don't think all the old information will make it in, but they're going to try and get it in. And yeah, so they're trying to bridge these two civilizations that you see in your mind to work together. And then it's not all this, there's going to be like leftovers on either side that aren't included, but it's like, try and imagine there are people that actually run the world. Not all of them are bad. Some of them are good. They're like, how do we make this work? Because like it's getting a little chaotic out there. And it's just because we're so much more interconnected now because of the internet. So blockchain is kind of internet 2.0 in my like it's scaffolding they're putting on top of the internet to make it actually function with the society that we have.
Peter Thiel recently said that essentially like a one world state project would be halted by cryptocurrency, which is, speaking of, you mentioned essentially like the billionaire class of billionaires. Speaking of billionaires, Peter Thiel making such a comment is pretty, I don't know if it's elucidating, but it is a data point. And then there's also Warren Buffett and Charlie Munger. Their reaction when they hear about Bitcoin is just yet another data point. However, it is pretty telling. Why are these guys so frustrated by Bitcoin?
Because they're older. That's not their thing. Like we all as human, this is the psychology. So we crystallize as we get older in our thoughts and our beliefs. We like, I don't want to change. I don't got time to be changing and learn all this new stuff. But I like, if you want to live longer and be happier, change and go along, grow with it, learn these new things. But they're also the gatekeepers of the old system. Like Charlie Munger, Warren Buffett has been thrown out there for decades now as like the go-to for this stuff, and they're not ready to let all the people bridge into cryptocurrencies. They don't want all the people that have the wealth to actually listen to what they say, those two men say, to be like, oh wait, they're saying like jump all in, even though behind the scenes Berkshire Hathaway has been in cryptos for a while now and is a big player in some big key projects. It's all, that's part of the propaganda game. That's part of the messaging. The US dollars don't want to stop being the big dog on the field anytime soon, even though Bitcoin, China, all these other things that are pushing in on it. It's always that's like the thing I'm more realizing now is like, we learned about the game of risk when we were kids, but that's actually going on like in real life over the centuries, over thousands of years. even you start getting into the woo of UFOs and stuff. I'm like, imagine the game Risk goes on in like planetary levels, and there's a person that's assigned, or an entity that's assigned our solar system. It's like, you govern that. It's like, oh, we can go up layers and layers in that, the whole as above, so below kind of a thing. So yeah, just bringing it back down into our own society and stuff. They're trying to transition to a different system. You mentioned these people, and I'm like, the people that are in charge, we don't even know them. They're like billions. Like, why do I need money? I own that country. I don't need $1 billion, kind of a thing. And you don't even know their names. So like, yeah, I think that there are forces trying to govern society overall. I don't think I'd want to be in that position, because that's a lot of work, and we're not easy to satisfy.
And it's, I think, an unnatural work at the end of the day. But I want to talk about some of the work you've done lately on Cointelegraph. Like, for instance, on Friday, you published an altcoin roundup, 3 proof of work protocols focused on building Web3. Proof of work models are evolving to support the growth of Web3. And then you go over 3 different projects. So the first one's Helium, which is a decentralized blockchain powered network for the Internet of Things. And it is a network of devices that utilizes a global network of low energy wireless hotspots that broadcast data via radio waves to be recorded on its blockchain. The network uses a new work algorithm that has been dubbed proof of coverage to validate that hotspots are providing legitimate wireless coverage, and that miners receive the platform's native HNT token for helping to provide coverage for the network. The Helium network saw tremendous growth throughout 2021, with more than 309,000 nodes currently in operation. What else about Helium did you learn while you're researching it?
Well, I didn't need to. Oh, like I've known about Helium for a while now. Actually, I had been interested in the project for a while, but I just didn't buy a miner. And then I was on Twitter, and Anthony Pompliano did a Twitter giveaway. He's like, answer what does blockchain mean to you, and what does it do for people? And I gave an answer, and he's like, you win. And he gave me a Helium miner. So Bitcoin mining is expensive. It's becoming the big boys game now. You got countries mining it. It's really, yeah, it's expensive. It's energy intensive. You always have to update your technology. So it kind of pushes out the normal investor. Helium, in my opinion, and this isn't associated with Cointelegraph or anybody, this is my opinion. It's one of the best opportunities for the average person to get involved with the mining on an ecosystem and earn it without having to spend a lot of money, even for just the regular output. Like, it's almost equivalent to an LED light running the Helium miner. It piggybacks off of a person's Wi-Fi signal. So it kind of piggybacks off your Wi-Fi signal. If anybody that's on the network, there's different partners that join the Helium network. So it could be like a company that has ground sensors measuring groundwater, or even weather sensors, and they're generating data. They broadcast that data to the Helium network, and the Helium nodes all around kind of piggyback it and mine it to the blockchain. And that's how the system works. So it's looking, that's all done on radio waves, I believe. So it's a really low energy way for people to start getting involved. But then they recently partnered with the Dish Network, and there's now Helium miners that can do 5G. We can get into how people feel about 5G. That's a different story. But people can now get a little Helium miner, put it on their roof, and broadcast a little bit of a 5G signal for people. So they're participating in the network. And so instead of having all those big towers where the company comes and just puts them in, each person is getting their own little signal, broadcasting it, and then they get a little piece from the network that's being used. So if they're helping the signal, their miner earns money. So they're being rewarded for the signals that's already all around us for just helping it. So it's the original one was meant for Internet of Things devices, so smart devices, your smart TV, smart fridge, all these little things, like I was saying, little tiny sensors and stuff like that. Now the Helium network is starting to expand, and as you said on there's like over 309,000 nodes now, starting to cover all of the United States, China, all these different countries. So it's like creating a Verizon from the people up, and allowing each person to get a little cut of the money that's made by the network, instead of having one centralized entity doing it all and getting all the profits and stuff.
And recently we saw Helium HNT, more specifically, rallied to a new all-time high at $53.11 as of November 9.
Yeah, they a couple several months ago, maybe even like a year, they capped off the number of supply of helium tokens that could ever exist. And there's also, they've worked in a way for people that have larger amounts to stake it. There's governance abilities now, so you can, people on the network can govern and help development of the whole ecosystem. So yeah, it's probably one of the best use cases, actual physical use cases in cryptocurrency, in my opinion, right now that people can adopt. Like, yeah, you go to Cointelegraph, Coin Market Cap, and there's over 14,000 cryptocurrencies now. Like, yeah, everybody, don't be fooled. 95% of these are going to go away just because not all the first websites or Netscape, things like that, are still around. I was even reading an article about new MySpace earlier, and there's a new one called like Hey Space or Hey MySpace, I don't know. But like, all these projects darn needed, and all of them, a lot of them are just kind of there for people to have fun with. But things that actually offer something to the world in a decentralized manner, like Helium, where it's creating a network where eventually you can power your own 5G phones and stuff through the Helium network. It's creating, and it's a decentralized network that allows everybody to make money off of it. It's, yeah, that, to me, that's where the whole decentralized future is headed.
You also wrote about recently in Cointelegraph on Friday about Cadena.
I think it's Kadena. Yeah, it's
Cad-
a proof of work coin. But again, the difference between a lot of these, and this is actually might be it's going to be interesting to see what happens here in the future because of what just happened with Bitcoin and Taproot, because that does eventually potentially open up the ability for smart contracts and stuff. Whether the network can handle it, whether the Lightning Network and all these things can make it so people can come on there and do things fast is a different story, because things take a lot of,
Decentralized.
yeah,
It
decentralized.
can be done for sure, but what amount of decentralization will somebody using Bitcoin for these higher level operations be sacrificing?
And that's the problem. It's decentralized on the Bitcoin level, but once you start adding these layers, that's centralized. Those are centralization layers, because it's a thing governing how things happen on the list. So that's why they haven't done it yet. It's like opening up vectors of attack, and people are like, oh, and that goes away from the whole. I'm like, man, this is a philosophical debate, and I get why people are so like, oh.
Software engineers will also perhaps argue that building it in layers is a form of modularity, and therefore it's a better engineering design than something like perhaps Eth2.
Yeah,
However, there's there is a lot hanging in the balance for Bitcoin, but I guess ultimately there's going to be a lot hanging in the balance for all of these projects.
yep.
So on Cadena, it's a scalable proof of work layer one blockchain that claims to be capable of processing up to 480,000 transactions per second, thanks to the use of so-called braided chains. Unlike the top POW cryptocurrency Bitcoin, Cadena also offers smart contract capabilities similar to those found on Ethereum and feature its own smart contract programming language called Pact. Being smart contract capable means that the Cadena network is capable of hosting decentralized finance and NFT protocols, as well as a host of other specialized projects from stablecoins to payment processors. Some of the goals of the project have been to address the major issues plaguing the Ethereum network, such as high transaction costs and network congestion, and claims to offer marginal transaction fees for consumers while also introducing a quote crypto gas station feature that lets businesses create accounts that exist to fund gas payments on behalf of its user base when certain conditions are met. So what else can you tell us about Cadena that you have learned?
Well, with Kadena, it's like, imagine you knew all the problems and issues that both Ethereum and Bitcoin were going to face, and then you made a new project. I'm like, that's what Kadena is. That's what it's like. That's the benefit of being a newer or a later generation project. So they've addressed some of the issues that Ethereum and Bitcoin have faced, like the ability for them to do 480,000 transaction per second is actually because there's a layer two. From what I gathered from my research, that there's a kind of a layer two already built in that can allow kind of a sharding or an off-chain way to put some of those things so they're not necessarily right happening on the proof of work part of it, and it's built into the system. So yeah, like ETH2 is trying to change your tire while the car's moving on the freeway. It's like, oh crap, these small other projects, they've been able to kind of put these things, implement them without having the strain of all people, all these different protocols trying to operate on the network driving up the gas costs and stuff like that. So Kadena is definitely focused. It's doing that. It's got the proof of work because both Bitcoin and Ethereum are proof of work. Ethereum is switching to proof of stake. But Kadena comes in as proof of work, but has the built-in capabilities to handle higher transaction processing. And it's really focused on tracking the attention of the DeFi and the non-fungible token, because that's been the hot sectors in cryptocurrency. So it's also, this is a marketing game. All these different, there's lots of different platforms can kind of develop the similar tech capabilities, but how do you draw on the crowd? You have to have good marketing, good developers, good even user interface is really important. How it looks when the person arrives there. So yeah, it's ETH and Bitcoin have first mover advantage for sure. Kadena though, it's jumped up. I like, damn it. I had some of it like at 15 cents, I believe, in like early 20. And I'm like, damn, I was consolidating my portfolio. I'm like, you can't have so many coins, Jordan. I'm like, and that one I just consolidated. I'm like, proof of work's on its way out. And now it's over 20 something. I'm like, damn it. So it's tricky for everybody. Is proof of work the future? I don't know. I think with the way environmentalism is going and all this stuff, I'm like, proof of work's going to be hard. It's going to take coins that can, like my Helium is a completely different approach to proof of work. And you might not be able to call it proof of work in the same sense that some of these other ones are, but this is all an evolving system as time moves forward until like we as humans kind of settle on which one works best for everybody.
So some other tidbits about Kadena. It utilizes the Blake algorithm as its consensus model, which requires native ASIC miners and cannot be mined using GPUs or CPUs. Recently, KDA launched a wrapped version of its token called WKDA that is capable of interacting with all Ethereum virtual machine EVM compatible networks and their associated DeFi protocols. In the future, the team behind Kadena also has plans to add cross-chain support for other popular blockchain networks, including Terra, Polkadot, Celo, and Cosmos. Data from Cointelegraph Markets Pro and TradingView shows that as a result of the recent developments, the price of KDA has surged 1,280% from a low of $2.05 on October 17th to the new all-time high at $28.44 on November 11th, a few days ago. And then the next project you highlight is Flux. And Flux is a native GPU mineable POW protocol that is focused on scalable, decentralized cloud infrastructure for Web3 applications. According to the project, the Flux ecosystem is comprised of a suite of decentralized computing services and blockchain as a service solutions, which offer an Amazon Web Services-like development environment, as well as the Flux OS, the Flux operating system, second layer operating system that is capable of running, quote, any hardened Dockerized application. Like, what else have you learned about Flux?
Well, what you're talking about with both of those that's important is the focus on interoperability. So like with Kadena, they've been, the WKDA has made it so that they can, like, everybody needs to get into Ethereum because that's where all the action is. So they can now trade in Ethereum DeFi. Flux, the big difference between Kadena and Flux is the ability, the mining is, Kadena has ASIC mining, which is a specialized equipment. You got to buy it specialized. You can mine Flux with your computer, CPUs or GPUs, graphics cards and stuff like that. So it's playing to two different crowds. It opens it up a little bit wider with Flux, but it's also Flux. I think that they've adapted as well to try and capture different sectors of the market. So they have their mining. They also have the ability to do a kind of a master node or lock up tokens and stake them. So token holders can stake their tokens, or people can mine it to earn tokens and participate in Flux. While they're also kind of working on the decentralized cloud computing aspect of the whole ecosystem. You don't get too much of that on, like, specifically on Ethereum. You might have other projects on top of Ethereum that work on the cloud computing aspect of it. So Flux is kind of capturing proof of work, proof of stake, also coming into the Web3 development and decentralized cloud computing. And again, so it's just trying to really play to lots of different evolving or emerging fields and stuff like that. I didn't really see too much about it before this project. I just seen that it had gone up a lot in price recently. I think before, when it was released in 2018, it was Zelcore or a project like that. And I think so they rebranded and changed over the years, and that's what any project's going to have to do to try and stay viable long term. So that's just another option for people that want to get involved. maybe earn some on the side using their resources and contribute towards the Web3. But that's also like what we're seeing is what sets Cadena and Flux apart, in even so not so much Helium, because that's a whole separate beast in itself, is the smart contract capabilities and what can be done on it, trying to integrate smart DeFi, NFTs and stuff like that. At the old world, that's why Taproot might help with Bitcoin, because it can allow smart contracts in the future. Because if that didn't come, or Bitcoin just stays as this like the digital gold that only holds value, it won't be the biggest coin forever, kind of a thing.
Continuing on the Flux network, you write that the Flux network uses the Zell hash algorithm, which is a GPU mineable implementation of Equihash 125.4 and can be mined through a Flux community pool or on a variety of third-party pools created by teams that support the Flux mining ecosystem. The block time on the Flux network is 2 minutes, and the current block reward is 75 Flux, with 50% going to node operators and 50% going to miners. On November 9th, the project introduced Light nodes, which enable Flux nodes to be managed using Light wallets so that operators can start and monitor node metrics from any device capable of running on Flux nodes app. Data from Cointelegraph Markets Pro and TradingView shows that since October 24th, when it was revealed that Apple Pay would be integrated with the Flux Network's Zellcore wallet, the price of Flux surged 802% from 33 cents to a new all-time high at $2.96 on November 12th. While the POW model of consensus is no longer the dominant model used by major projects in the crypto ecosystem, these three examples show that it still has a lot to offer because the new platforms are environmentally friendly and economically sustainable. Any other comments on Flux?
No, not too much specifically on Flux. Again, this is the first time, and that writing that piece is the first time I really looked into it. But it just does speak to me like how the whole system is evolving. Got projects trying to evolve along with and integrate new things. But long term, a lot of them aren't going to be good. I don't know if Flux is going to be there long term. I'm not recommending anybody buy that. That's just because to me, it looks like they're trying to stay viable in a field that's increasingly becoming more complex and crowded. So it's good. This is going to be an interesting game to watch over the next decade, but there's going to be a lot of projects that come and go. And like every cycle we've had, Bitcoin is there at the top, and you might have like a Litecoin or Ethereum or something come up and stuff, but a lot of the other ones shift around. So it's going to be interesting to see what all really happens in the future and what people find to be most valuable.
So you've mentioned Taproot a couple times. What is Bitcoin Taproot?
I'm not. I'd have to get too deeper into that. I was reading about it, and it just seems like they've made some upgrades to the network. Yeah, I can't speak enough with enough authority on what it specifically is, but a lot of people, it's been in development for like over 4 years. It's going to add other layers, and it'll enable different things, even the ability to create. Yeah, it's going to bring smart contract abilities to capabilities to Bitcoin, and that's why it's going to make it so that a lot of the projects that are out there are no longer needed, because Bitcoin has so much attention now, and so much of the market cap, the people and the money that's invested in it are vested in making it more robust, capable network. So that just because they have these capabilities, there's going to be lots of projects that launch on top of Bitcoin because of Taproot that do some of the things that other projects out there are doing, and they'll succeed better because of the fact that they're on Bitcoin and they're not on, even if they're on Ethereum or other networks and stuff like that, or even their own network, because that's hard to get your own, to build up your community base and have a big war chest of funds that actually exist within your ecosystem, which Bitcoin has. So it makes it so that a lot of these 14,000 tokens are going to die, basically, or some of these projects might try to migrate over into Bitcoin or something like that.
I'm looking at a CNBC article, which I imagine was published today. Yeah. Right as I imagine Taproot was activated last night, and they wrote the first Bitcoin upgrade in 4 years is called Taproot, and it just activated. The Taproot update means greater transaction privacy and efficiency. And crucially, it will unlock the potential for smart contracts, which can be used to eliminate middlemen for transactions. So I'm moving down to the section, what's changing. A big part of Bitcoin's makeover has to do with digital signatures, which are like the fingerprint an individual leaves on every transaction. Right now, the cryptocurrency uses something called the elliptic curve digital signature algorithm, ECDSA, which creates a signature from the private key that controls a Bitcoin wallet and ensures that Bitcoin can only be spent by the rightful owner. Taproot will add something known as Schnorr signatures, which essentially makes multi-signature transactions unreadable, according to Bitcoin miner Alejandro de la Torre. It won't translate to greater anonymity for your individual Bitcoin address on the public blockchain, but it will make simple transactions indistinguishable from those that are more complex and comprised of multiple signatures. In practice, that means greater privacy because your keys won't have as much exposure on the chain. You can kind of hide who you are a little bit better, which is good, said Bitcoin mining engineer Brandon Arvanagi, who now runs Meow, a company that enables corporate treasury participation in crypto markets. Smart contracts made possible. As Fred Thiel says, quote, the most important thing for Taproots is smart contracts. So that's just some, I guess, brief background on Taproot.
Yeah, so there's a lot of technical stuff you can go into, but yeah, it makes a lot more things possible. You can create wallets, you can share partial private keys, you can conduct it, so you can try to conduct a deal from somebody, but say you gotta send them some part of your key, then you fly over there and you make sure that what they're selling you is there, and you go, okay, here's the last few words, and then they can conduct the transaction right there and finish it. There's lots of different things. Basically, is making it a little bit more user friendly, and it's gonna make, and everybody keeps seeing that. Everybody's like, it enables the possibility of smart contracts. So they're not, they can't start writing on top of there yet, from what I've gathered, but that's gonna be a possibility in the future, and a lot of projects are gonna launch because of that. And there's a project called Blockstack STX. It's focused a lot on the Bitcoin and smart contracts and different things on that. I've written several pieces about that. So they've gotten some pretty good traction because of their focus on Bitcoin. So yeah, this is going to change kind of the world of cryptocurrencies and smart contracts, and all these new projects aren't going to be so popular, or they might actually start launching on Bitcoin.
You also recently wrote about vector space AI.
Yeah, that's I've had, that's been my dark horse, man, since like 2019. But it's a correlation matrix, AI correlation matrix. So you got data out there that they have some big partners like the Department of Energy. They say they're like bioscience, space bioscience focused, but okay. Anyways, so you got data houses. So this basically correlation matrix. They put AI algorithms, all this stuff, technical. They'll take all this data, kind of sift through it, and be like, we've come up with these options that you say would have taken a human like 2 years to go through all this data. It'll go through it in like 20 minutes and be like, try these substances. Like, so early on in COVID, it went through all the available data, and it's like, try these 5 different substances to counteract COVID. And one of them was like quercetin, which doctors talk about now. So it came up with, because of all these different studies that we've determined that these are probably your best chances. Your best likelihood of finding a good cure would be with these 5 things. So we can do that with all the data out there. So what's the best form of metal to use for this type of engine or something that you're building? You can put all the studies in there, and it'll be like, oh, try these alloys. And so instead of having to go through like one by one for scientists trying to experiment with things, correlation matrices cut down the data, so it gives you a smaller number of choices that you want to choose from to actually approach that thing.
You wrote in Cointelegraph that vector space AI flies under the radar to new highs as big data becomes the new oil. High-level partnerships and a focus on using AI and big data to find solutions to complex problems are backing VXV's quiet climb to new all-time highs. Quote, I'm in it for the tech is a phrase commonly used in the cryptocurrency ecosystem by many who want to express a deeper motivation for being involved with blockchain tech beyond the significant gains that are known to happen in the volatile asset class. One project that has quietly climbed the charts without the need to jump on the decentralized finance or NFT trend is Vector Space AI, VXV, a protocol building correlation matrix datasets capable of detecting hidden relationships in data and training AI systems. Data from Cointelegraph Markets Pro and TradingView shows that since hitting a low of 71 cents on May 23rd, the price of VXV has skyrocketed 2,267% to a record high at $19.47 on September 16th, before experiencing a significant pullback alongside the rest of the crypto market. Any other comments on vector space AI?
No, it's like I said, it's flying under the radar. It's not all sexy like DeFi or NFTs, but they got big partnerships. They don't even put out announcements. It's frustrating. I haven't none of that time was able to write about it because they don't announce anything. The only reason that this recent one got on there is because they got listed on a big exchange, which was their first big one, really. But yeah, it's a project. I've seen it mentioned on even on like a late night TV show. Those was talking to one of the people in his crew, and he's like, vector space, and it's like, what? So it's just it's a, again, like that. I like that first quote. I'm in it for the tech. This is a project that people know about, and they're like, oh, I like the technology. It's not there for the DeFi. It doesn't do that kind of stuff, but what it's trying to do and the actual use case it offers to the world is interesting, in my opinion, and one to keep an eye on. But there's also like caveats to that. I think there's 50 million tokens. I know early on people kind of saw that. I think some groups kind of got large supply of the token, so that they help guide its path upwards, because it's not like a lot of these other projects where there's a large token supply and with a lot of large tokens. So yeah, it's always be careful with them, but keep an eye on it because it's an interesting piece of technology.
What do you make of NFTs?
They're the real path to mass adoption. That's why it's been so wild. Like Shiba Inu, Dogecoin, those were meme coins, but they kind of morphed into the whole NFT thing. And then we had the blow up of the NFT sector with Crazy Apes or the Crazy Ape Yacht Club and all these different ones earlier, CryptoPunks. But we got rampant inflation in the world, and people are looking for places to shove their money. And some of the early crypto people just have way too much money to throw around. Like the only people that have like 100,000 Ethereum are going to spend 100 Ethereum on an NFT, in my opinion. But it's showing you the human desire for collectibles. We've ever since I collected Pogs, baseball cards and stuff when I was a kid. We still do that too as adults. Now we've just transferred over into this digital realm. But again, it's the way to mass adoption because there's so much capable with NFT technology. The fact that it's gotten such a big draw just from the art part of it is teaching me like, oh, they're using this to pull people in. But like I said, in the future, you'll get an NFT that represents the deed to your house. You'll hold it in your digital wallet. You'll go to the bank and you say, I want a loan. I have this asset proven in my wallet that's worth this much. And they'll give you a loan based on, you can have your stocks, you can have your deed to your house as NFTs in your digital wallet that you prove you own, so you can take out a loan against that. That's just a piece of what in the future, you'll be able to buy a fractionalized piece of the Empire State Building and get a piece of the revenue from that, or the Burj Khalifa, or a popular hotel, MGM Grand. Like maybe they'll sell that one day in an NFT, and each token you'll hold it in your wallet, and it'll be a smart contract that distributes dividends directly to your wallet because it goes to the token. And you like all the paperwork and all the stuff that exists in the current world won't be needed because it'll be on this digital ledger. So that's the future of NFTs. And now it's pictures. It's like, but even that, like Avagochi is an NFT project built that was built under Aave, which is a DeFi platform. So Avagochi, you create NFTs, they're limited numbers. It's like a randomized thing, but then so you summon one of these cute little ghosts, Avagochi. You when you want to create it, you actually have to put digital assets in it. So you have to take like an Ethereum and put it into the Avagochi when you create it. So that gives it a base value of 1 Ethereum, because in order to get that Ethereum out, you're going to have to burn that token in the future. And again, there's only a limited number of these. They don't just infinitely make the Avagochis. So it's game theory mixed in with collecting, mixed in with NFTs, and you can add other little pieces to it that make it even more valuable. And then you can send it to sell it to people. You can battle it against other Avagochis and make it stronger. So this is like we all grew up with gaming, and now they're making like financialized gaming with collecting, and it's like it's an interesting evolution.
You mentioned like NFTs demonstrate man's interest in and women's interest in collectibles. And what comes to my mind is like a fascination with scarcity. You know, I've been talking about these more and more, and I shouldn't be because I really want to corner this market one day, and it makes no sense. It's irrational. But they used to make in the 90s these gold and silver 1 gram sports cards, like Donruss, I think, made most of them. And now you can buy like a 1 gram 1 gram gold Kevin Garnett 25 were made at that time basketball card. You can do the same for baseball. And now I love these things, and I love them not only because there's like gold and silver in them 1 gram each, but also because there's like 25 or 50 each. And some of these NFTs, there's only one. I can see like them being instrumental not only to the institutional examples you gave, but also to like a bartering-esque economy, an economy of competing private mediums of exchange.
So yeah, this is what like the NFTs and blockchain. So like go back to what it used to be like with gold and silver and bartering, and how that got like the reason that fiat came around is because like, damn, this is hard. It's hard to chip off the right amount of silver, or like, what do you mean you only got eggs and I got a big ass cow? Like, how are we gonna deal here, right? So what this actually does now, to again go back to the NFT tokens you can hold in your wallet and prove what you have. There's like a program called WAX, and it was originally World Asset Exchange. So you imagine the ultimate barter interface where whatever you have that has value, it's represented in a token. You can then trade with somebody else in a token that represents the thing that you're trying to buy and redeem that in the real world, kind of a thing. So instead of like you got a cow and they got eggs, they have one token. You give them 0.01 of your cow token in exchange for a couple of egg tokens. And then you go to the store and here's your egg tokens and you get your eggs. And they go to the store and they buy their beef with their cow token, kind of thing. That's really simplistic, but that makes it possible in the digital landscape. So anything can be traded with anything without having to like cut it up in real world pieces. I don't know, like it's hard to explain that part, but it makes bartering possible with anything, because you can fractionalize it in a digital representation and without, yeah, you can fractionalize anything and barter or sell or trade it.
We've had the honor of sitting down today with Jordan Finneseth, Cointelegraph markets writer. He's also the author of A Manual for the Soul, a beginner's guide, Awaken to Your Enlightenment in Millennium 2.1. Thank you so much, Jordan, for joining us today.
Thank you for having me. I had a good conversation.
And thank you everyone for listening.